Welcome back to another video here on P2P Empire on tour. Today I'm in Lausanne, Switzerland, and I'm about to visit YouHodler, which is a crypto lending platform where you can deposit your crypto and earn interest. The platform is currently offering between 6 and 7% interest on your Ethereum and Bitcoin and up to 12% interest on your stablecoins. The goal of my visit today is to learn more about the risk management of YouHodler and whether they are able to protect my assets. I've been investing on the platform for about a year now, so it's also in my personal interest to learn more about YouHodler. Just a quick disclaimer here, this video is not sponsored. All the costs connected with this trip are covered by P2P Empire. If you find this video valuable and you would like to support our project, you can do so at buymeacoffee.com/P2P-Empire, where you will also be able to become a member and get access to exclusive behind-the-scenes footage, which is not going to be published here on this YouTube channel. Alright, so my meeting with YouHodler is in about 15 minutes, so let's get going so we are not late. Alright, so I'm here in front of the offices of YouHodler in Lausanne. It's important to highlight that YouHodler has also an office in Cyprus, where half of the team is located here in this branch. Most of the managers are sitting here, as well as the legal team. And today I'll be spending a couple of hours with the CEO to learn more about YouHodler. So let's see if he's already here. Upon arrival at YouHodler's office, I got greeted by the CEO Ilya Volkov, which you might have had the chance to see in one of my previous interviews. I also got to meet up with the team and got a quick office tour, so let me show you what their office in Switzerland looks like.
Hello, welcome to YouHodler SA. This is our Lausanne office. So my name is Vicky Kapuka and I am Legal and Compliance Officer for YouHodler. So I'll be showing you a little bit around our beautiful office. Let's go. So this is our CEO's office, Ilya. I think he stepped out for a bit, but oh, there we go. This is our CEO, Ilya. We really love working with him. He's amazing.
Here's my office.
Yes, we got some beautiful pictures over there.
Some mess on my desk.
Okay, we can go. Over here, we have our legal office. Our legal officer is not in here. He normally sits there. His name is Julian. But today we also have a guest. He is our head of products and his name is Alex. Yeah, so this is where all the trouble happens, actually. If anything happens, we are in this office.
Yeah, but I'm not part of this office.
He's from our Montenegro office, but all right. So this is our open area. This is where we have most of our social settings, watch a little bit of some news, and we have what we call Prosecco days every once a month. And this is where you'd normally find it. Hopefully at the end of the day, you'll catch some Prosecco for the evening. So this is like our amazing welcome board. So all our guests that arrive or when you have functions, we always try and get some, comments and some welcoming remarks from everybody. And over here, we have one of our office spaces. This is our intern, Ronak. The finance team also sits in here, or the rest of the team when they visit us from the different countries, we normally try and settle them in here. Oh, and our little kitchen space. And over here, we have our Chief of Compliance, Igor.
Hello.
He's a lover of plants, as you can see. Very nice atmosphere in here. And as we go, well, this is our boardroom for all important meetings. This is where we are. And anybody that's visiting us, pretty chairs. And in here we have the beautiful ladies. This is our compliance department. So this is the department that I work in. Over here we have Alex. Alex is our compliance officer. And then we have Irina. She is also one of the compliance officers. And then here we have Emmanuel. She serves as legal and compliance officer as well. So that's about it. Hope you enjoyed the tour of our Lausanne office.
After the office tour, I sat down with the CEO Ilya Volkov to talk about risk management so I can get a better understanding of how YouHodler safeguards my crypto. If you are new to crypto lending, here's a quick crash course. As you might know, cryptocurrencies are rather volatile digital assets that people buy to eventually benefit from the growth of value. Typically, you can buy crypto on exchanges like Coinbase or Kraken and then transfer it to your preferred hardware wallet. This is a safe way to store your crypto and simultaneously benefit from the growth of value over time. Now, some entrepreneurs thought that there is a better way to use crypto rather than hold on to it, lending it to others and charging fees for it. And that's how the first crypto lending platforms evolved. By depositing your crypto to the crypto lending platform, you are earning attractive yields, which further increase the balance of your digital currencies. That sounds great, right? Well, there is a catch. Crypto lending platforms soon realized that there is not much business in just lending crypto to other crypto users. So they started deploying users' digital assets in many undisclosed revenue-generating activities whose risks were unknown to people who thought they are funding over-collateralized crypto loans. This was further pushed by big marketing campaigns, paid advertisements, and claims like unbank yourself. The crypto lending platforms started speculating with users' assets, which turned out to not be sustainable, as recently some of the largest crypto lenders, Celsius, Vault, and Voyager, froze users' accounts and locked billions of users' funds. Can this happen to YouHodler as well? To better understand the risk, we first have to understand how YouHodler makes money. Obviously, people who have been using crypto lending platforms, they are aware of the basics, how it works. They basically deposit crypto on an interest account on a dedicated platform, and then they earn yield on it. What a lot of people, however, are not as familiar with is how it works in the background. What are you doing with my deposits when I deposit my crypto on YouHodler? So can you perhaps explain briefly how it works?
Yeah, sure. We have 4 different groups of products. So first one is just basically infrastructure products. It's about payments and conversions, exchange. So we can accept crypto transfers or fiat transfers to the platform. Then we can perform conversion operations, convert from crypto to fiat, from fiat to crypto, from crypto to crypto. So first category is mostly about conversion and exchange. Second group is mostly about lending. So you can get fiat by using your crypto as collateral. So basically you can pledge your crypto and get fiat or stable coins or other cryptos. So it was the second group. Third group is about trading. So you can basically play with your cryptos, trying to benefit from different kind of market movements, from ups and downs. So, and number 4 is about crypto interest accounts or crypto rewards. So 3 out of 4 are revenue generating products for us. So we're getting our revenues from exchange conversions, we're getting our revenues from lending products and from trading products. As for crypto interest accounts, for us, it's more like a cost. So we're pretty much different to many other crypto-backed lending platforms, because if we speak about some of them, they are operating mostly like a hedge funds. I mean, they're taking your funds and then they're placing your funds somewhere else. They stake it on different protocols, or they lend it to third-party institutions, financial institutions, and not only. So we do not do that. So we do not lock customer funds outside of the platform.
This is by far the most important difference between YouHodler and other lenders who prefer not to publicly disclose their yield-generating activities, which are often very risky. Let's hear how it works in the real world. So if we dive deeper into this, let's say I deposit Bitcoin on YouHodler, then I see it in my account, in the interest account. You have deposited this amount of Bitcoin, you will earn this amount of interest. It's going to be paid out every Friday. What is happening in the background? You take my Bitcoin and it goes into a liquidity pool that you use according to where you need the asset, or how does it work?
First of all, let's maybe speak about the structure of our custody. So we have our own solution, custody solution, as a core, and this core is surrounded by several additional layers of security and several additional custody solutions, such as Ledger Enterprise, Ledger Vault, such as Fireblocks. Also, we have a number of bank accounts, traditional bank accounts and crypto bank accounts. And of course, we have our integrations with a number of exchanges. That means that your Bitcoin joining our custody, and it can be stored on a cold storage deeply inside our freezer, somewhere in Ledger Vault. Or, of course, it can be transferred to exchange just to join the liquidity pool in order to have enough liquidity to perform exchange operations. Or it can be used inside the liquidity pool for crypto-backed lending solutions. But the key point is that we always keep an eye on the balancing. So meaning we always have enough liquidity to fill all our obligations. Meaning we have enough liquidity inside our custody and enough liquidity on external exchanges in order to perform instant conversions.
It's also worth noting that YouHodler generates revenue from all revenue-generating activities and then pays all the rewards to users.
We generate revenue from all our revenue-generating products, and then we're paying back to our users in general. Some of users are more active, and they're generating more revenue for us, some more passive, but on average, so we are able to pay interest rates that we state on our platform and our websites. I think their important point is about limits, actually. So as I said, we monitor and we pay great attention to balances and efficiency. That's why, of course, we have to manage several parameters. Of course, interest rates per every single coin and limits per user and per coin. So probably you noticed that recently we have reduced default limit from 100K to 25K. Why? Just because of efficiency. So we are able to pay offered interest rates by default for 25K on average, and for active users we can pay much more. And again, to illustrate it, so we have different products on the platform: exchange, lending, trading. If you'd like to extend your limit, you can use our platform more actively. So some people are using actively loans.
When comparing the limits of YouHodler to some of the other platforms, together with the level of transparency that you get, there is not really a worthy competitor.
By that, those users can extend their limit and generate for us more revenue because we're getting revenue from volume.
Yeah, I mean, of course, you kind of want the users to use revenue generating tools on your website, right? Which are, however, connected to much higher risks than just having an interest account. Yeah, but I understand the point behind it. I know that some of the platforms, they have those tier systems where they decrease the amount of interest they pay out the more crypto on deposits, which you don't have, which is, I think, a benefit. What I was wondering is how many users, active users on your platform, fall under that 25K yield limit?
Excellent question. So we have a strong retail focus, very strong retail focus. So our typical customer is just middle-class person. And all our products since the beginning are built for normal people, regular people, with the one simple idea in mind. So we'd like to unlock all the benefits of crypto in the most secure and simple way for wide audience, not just for crypto geeks and crypto nerds, just for normal people. So that's why the absolute majority of our customers are falling into this group.
Most of the users fall under the limit of 25K, which means that there is a chance that you can earn the highest yield without the use of features that are connected to higher risks. Many crypto lenders have in their terms and conditions the clause that they can rehypothecate your assets, so I ask YouHodler if they follow the same trend. Some of the platforms in the market, they have in their terms and conditions the word rehypothecation, which basically means that they use the collateral of people who are borrowing money and put them into their yield-generating activities. Is this something you do as well?
No, we don't use rehypothecation. We don't like this word. So everything is inside the platform. Everything is inside our system.
Most of the crypto lenders are also offering highly volatile utility tokens, so I asked Ilya whether he thinks that they provide any value for crypto users. In the crypto lending world, most of the platforms out there, they offer some kind of utility token, which is by default a very volatile and speculative, digital asset, and they offer it in order to attract people to stake it, to use it, and get higher rewards on their other crypto assets they deposit on the platform. You don't do it, and I'm happy about it, but I would like to hear your opinion on utility tokens for crypto lenders.
Since the beginning, we were always focused on efficiency. We are not backed by ICO. We're not backed by any VCs, and we are not burning VC funds. So those ones who have started from ICO, of course, had to use and still have to use their tokens. So again, we have started from our own funds, and we, with our focus on efficiency, we became profitable pretty much soon after launch, less than 2 years. And of course, we thought a lot about our own token just in order to somehow speed up our growth and simplify at some point risk management. But finally, we decided that it's not really needed because as for our liquidity management and our efficiency and our profitability, if we go slowly step by step, we can manage our efficiency and we can get real revenues and real, profit without any need to somehow manage, additional pieces of our balance sheet with our token. And for our customers, we thought that it will be much more easier to avoid this additional step. So I understand tokenomics of many different projects. For them, I think it's something convenient and something, let's say, less risky for them.
For the platform, but not for the user.
But not for the user, of course. Even if we speak about a recent event a few days ago, this big platform, of course, they still have their token.
Yeah.
And for them, this token helps to not eliminate, but it helps to them to reduce an impact into their own, balance sheet. But for users, No.
Just keep in mind that the volatility of your crypto portfolio is much higher when holding utility tokens. Ilya also shared with me that certain platforms can avoid regulations to a certain extent with their utility tokens as long as they can prove that it's not a security token. Let's now hear what the CEO has to say about speculative yield-generating activities. Some of the platforms on the market, they are using the users' assets to generate yield by staking on DeFi protocols, by investing in mining facilities, institutional lending, etc. You don't do it, but I was wondering what you think about those type of practices.
Of course, we had a lot of discussions inside our company, and of course, at some point, I got even some tough discussions because it was something like obvious, like why we're missing such great opportunities. So we have a lot of cash, so we can simply put this cash into Anchor protocol and get like up to 20% annualized profit out of that. And it was back then, it was like, actually, why not? So everyone does it, right? It works. But we didn't do that because, so first of all, we have quite different background. So if we speak about founders of the company and myself, so we have like 20, maybe something years experience in traditional banking and traditional trading with different financial assets. So we have experience from traditional finance, and that's why we know that it's important to care about customer funds. Plus, I'm not too young. I hope that I'm still young enough, but I'm not too young. I still remember Lehman Brothers crisis. It was not an easy to survive during that period of time. And it was just one example. Since then, we have experienced some other crises as well, right? So, and all our experience from traditional market says that it's better to take care of your portfolio, take care about your customer funds instead of benefit from some short-term opportunities. So I do not blame anyone who used Terra, Luna, Anchor protocol, and some other new modern fancy features. I do not blame them because still it was like a nice market opportunity. So, and it's still like a nice market opportunity to speak about many other DeFi protocols, but not for us.
When the speculation doesn't pay off, crypto lending platforms block withdrawals and lock users' funds, which significantly increases the risk for crypto users. Alright, let's talk about some of the recent events. This week has been quite turbulent in the crypto space. One of the largest crypto lenders in the US, they froze users' accounts, so they're not able to withdraw, swap, or transfer crypto to their accounts in order to avoid margin calls. What do you think about it?
Of course, it's not something good for the market, but honestly, it's not like surprising. I personally was not so much confident in this project. Again, not blaming anyone. So every project, every entrepreneur has his own approach towards risk management. So, but look, I think the problem was that they have locked significant amount of funds under some third parties. And of course, during the bear market, they have faced these liquidity issues and they have triggered massive withdrawals and bank runs. So actually no surprises. It's like some kind of a classic story from financial market. So we can read a lot of stories from traditional market about this kind of events. Nothing new, basically. So again, I think that the main problem was that they have locked too much of funds outside. And I think the problem again was that they have done several mistakes with their risk management. They were too much focused on the growth of the market, bullish market, with no enough attention to these kind of conditions like we have now. So, but as for the market in general, again, if we look back to the history of financial market in general, we will see, as I said, a lot of examples like that. And we can learn one important point out of it. Market becomes mature, market becomes stronger after this kind of events. Even if we speak about Terra Luna UST event, we can say that market has demonstrated a really good resilience. It was like a big negative event with Terra Luna Anchor protocols, but market demonstrated resilience, meaning even other stable coins were not affected, right? So Celsius event, I think, is here just to, again, to contribute to this resilience and to contribute to the market maturity. Maybe it's painful. Of course, it's painful.
For many users, it's
for many
painful,
users, yes. And I hope that at least some part of them will recover their funds. I hope. I don't know all figures, but I hope that they will be able to get something out of it. But as for the market in general, it's like investment into maturity.
If Celsius users won't recover anything, that is a steep 11 billion investment into maturity. Now, of course, if you have watched our previous video about Celsius from last December, where I shared my concerns with the platform, you could have avoided the loss. You should always do your own research about the platform and the people running it before you decide to invest any funds. Diversification is not going to save you in the crypto lending space, as there are still many questionable businesses operating and pretending to safeguard investors' assets. Don't take any rewards for granted. Every time you are lending your money, there is risk involved. Now, there are a lot of various cryptocurrencies, and it's unlikely that you will be reading all the white papers of various projects to determine whether it makes sense to invest in a certain asset. I was therefore wondering what type of due diligence YouHodler is doing when listing new digital assets on the platform. Alright, so let's talk about the risk management. YouHodler is offering a lot of coins on which users can earn interest. I would say you're probably one of the top players in terms of quantity of digital assets that people can deposit and earn yield on them. So I was naturally wondering if you do some kind of background check of the team behind those projects or due diligence, and what's the procedure behind it?
Yeah, sure. So we have our risk and compliance teams, and of course we do a lot of background checks. So long story short, because I think the process is quite complex. So first of all, we're checking market in terms of market liquidity, in terms of number of users behind, number of exchanges or DeFi protocols listing the token. So basically to list any kind of token on our platform, we firstly need to make sure that the market exists for this particular coin or token. So we analyze the volumes, users, the list of exchanges. First, if market exists, we go and check the nature of the coin and token. So we analyze white papers, we analyze the tokenomics behind. So basically we are doing an analysis of the business model behind the token or coin. So in third group is about reputation checks. So we are analyzing people behind, and we're analyzing basically reputation checks. I can give you a few examples. We were honestly not struggling, but we got a lot of internal discussions about Terra and Luna because market was quite good in terms of, amount of liquidity, volumes on every single exchange, and it wasn't easy to go basically to any of biggest exchange and get an access to a huge amount of liquidity. It was a positive point, but on the other side, after analysis of white paper, it was not very much clear that it will be sustainable enough. So, and finally, we decided not to touch that, just because, the Terra didn't pass through at least one of checks we usually do. I can give you another example, which is BSV, Bitcoin and SV. So initially we had this coin on the platform, and finally we delisted this coin after, famous buzz around that guy. It was mostly about reputation checks. Someone maybe can ask us about coins like Doge, right? Because there is no business model behind. But still, we decided to list Doge because comparing to, again, Luna, everything is clear. It's not like some kind of an investment model. It's very clear, very, let's say, plain model, pretty much understandable. So, and like Doge has passed our checks and we have it on the platform.
What do you think about USDT?
It's not an easy question. Someone may say that USDT may be another Lehman Brothers. I hope there will not be like another Lehman Brothers. Look, I have a lot of different thoughts about USDT. Nothing especially new, I believe, for our audience, because I think they're pretty much common. So first of all, I think we all should say thank you to USDT and to Tether, because they have opened this market for the white audience, right? They were first and they were quite successful. Without USDT, we would not have USDC, because USDC just followed them, right? So thanks to them for this. First. Second, obviously they are still the biggest, and thanks to them, again, we have very good liquidity flows in different kind of service providers on the market. So without them, it will be not so easy to operate on the market. But of course, it's clear that there are a lot of questions about their own risk management, their balance sheet, their reserves and all this stuff. But I think at least we can see some good progress with them, right?
You think?
I hope so. I think no one on the market, even their direct competitors, want them to die, right? No one on the market. And I think they don't want it. I hope so, again. So I hope that they will improve their transparency, their risk management. Why I'm saying that I see some progress. I see some, statements and some paperwork. Of course, it's not like a guarantee. It's just like do your own research, right? So yesterday they have published a statement in regards to Celsius, which was not bad, I would say.
Yeah, but they have also invested in Celsius, right? So they're...
But not so many.
Yeah, okay. Yeah, I think the statement was like everything is collateralized, right?
Yes.
Yeah, but they have been also, I think, I'm not sure if it was seed investors.
Probably, but as I remember, Celsius raised not so much funds from VCs and from the market. So I think it's not like billions, it's like, so I don't know exact figures.
I mean, there are the kind of the backbone of liquidity in the crypto market now. So in case where they would depeg the one-to-one,
Of course, it will be...
quite a massive crash, I think.
Yeah, but again, even if that happens, it will be another investment into the market maturity. Like Lehman Brothers didn't kill the market, right? Of course, it affected the market and we got a lot of issues. It was a deep crisis, right? But market survived and became better. Maybe not everywhere better, but still. So if they fail, probably we'll have another Lehman Brothers, but I don't believe that it will kill the market. Market will be affected, but not killed.
We have also talked about the security features of YouHodler, which we already made a dedicated video about on this channel. Ilya also shared with me that they are following all the required regulations.
We are already regulated institution, basically, not like some others who are claiming that they're regulated, but in reality they are not. So we're regulated and we are investing more in other licenses. So I believe you wanted to ask something about this.
So you are regulated by who?
In Switzerland, we are regulated financial intermediary and regulated pawnbroker. So meaning we can perform exchange operations and we can accept assets and pledge them, use them as collateral. Plus to this, we are a crypto asset service provider in Europe. So
We also talked about the MiCA regulation and the ban of interest payments on stablecoins. Ilya shared with me that there still might be some amendments or ways to allow rewards for stablecoins, which gives a bit of reassurance for people who follow a more conservative investment strategy. We also covered the incorporation structure and some of the terms and conditions on the platform. We talked for more than 3 hours straight, so naturally not all of the content made it to this video. If you want to access more information, you can find it in the membership section at buymeacoffee.com/P2Pempire. So that's been my visit of YouHodler here in Lausanne, Switzerland. I spent several hours with the CEO and he answered all of my questions without any hesitation, which is something I really appreciate. I think the biggest benefit for anybody who is interested in earning yield on their crypto deposits on YouHodler is YouHodler's business model. The platform doesn't lend your money to any external DeFi protocols. It is only used within their own ecosystem, which certainly increases the safety of your deposits. This means that YouHodler is one of the best options to deposit your crypto and earn yield on it in Europe. If you'd like to get notified about the latest developments on YouHodler and learn more about the platform, head over to p2pempire.com and read over an in-depth YouHodler review. So that's been it from me today. If you like this type of content, you would like to see more, hit the like button. Also let me know what you think about YouHodler in the comment section below this video. Thanks for watching and I'll catch you in the next one.